back to CUMIC Weekly, where we talk about the latest steel prices and the news in China. If you're new here, just hit the subscribe and like buttons right here. Don't miss out on any future updates. So let's check out the China steel prices first. This week in China, both spot and futures markets have slid, showing a weakening trend as market players were mostly bearish ahead of the Fed meeting. Despite this week, after the Fed raised interest rates by 75 basis points as expected, the bearish sentiment in the market was released, and the China's steel prices also rebounded slightly. However, in terms of exports, due to the recent depreciation of the Chinese RMB, the onshore RMB continued to fall after breaking 7 on Monday. Therefore, China's export prices continue to decline this week. According to the data on the screen, we can see that in Shanghai spot market, China's construction steel rebar fell by 40 yuan per ton. And in the future market, although the most active hot rolled coil on the Shanghai Future Exchange fell by 29 yuan per ton from a week earlier this Thursday, the price was at 3,768 yuan per ton, ending the downward trend in 6 consecutive working days. However, China's export price of hot rolled coil, according to MySteel's assessment, was between $566 to $580 per ton FOB, down by $10 to $50 per ton. Next, let's take a quick look at China's steel supply and demand conditions. As we predicted in our last video, China's apparent consumption is rising again, and inventories are starting to decline as usual, although not yet at the level seen during the same period of the past few years. Meanwhile, Chinese steel production, as shown on the screen, also showed a steady increase this week. This reflects the current strong supply and weak demand in China's steel market, which may restrain the rise of China's steel prices to a certain extent. In a nutshell, this week, while prices are falling this week, the Fed's rate hike finally settled as expected, brings uncertainty to the market, and both spot and futures prices have stabilized since Thursday. In addition, although the recent demand is not enough to boost China's steel prices, we believe that demand may still go up a little bit, because next week, as the last week before China's National Day holiday, downstream users are expected to drive market demand. So what does the market look like next week? From CUMIC's point of view, we predict that the prices are likely to fluctuate. What are your thoughts on the steel market next week? Do you think China's export prices may continue to fall? And if you enjoyed this video, don't forget to subscribe to our channel and give us a thumbs up. Just hit the subscribe and like buttons right here. See you next week. Bye bye.